Thanks everyone for joining. My name is Mikna Rotariu. I'm a Risk and Compliance Analytics Director with Lextegrity based out of Washington, DC. I'm a forensic accountant by trade, and prior to Lextegrity, I spent my last 15 years working for forensic consulting firms like PwC and Forensic Risk Alliance. I've mainly focused on anti-corruption matters and fraud, but also sanctions at times. I'm currently working on developing Lextegrity's transaction monitoring product to address risks such as corruption, sanctions, and fraud. As you all are aware, Russia's latest invasion of Ukraine started 120 days ago. The war is still ongoing, and tens of thousands of lives have been lost so far. As a result of the atrocities committed by Russia, the international community imposed unprecedented sanctions on Russia. We have a great panel, and I'm honored today to have with me Tom Firestone, a partner at Stroock Stroock Lavan, where he specializes international crime and compliance matters related to FCPA and anti-corruption, sanctions, money laundering, human rights, and the rule of law. Prior to joining Stroock, Tom spent his 14 years with the U.S. Department of Justice. While there, he served as a federal prosecutor in the Eastern District of New York, specializing in international organized crime, and was the resident legal advisor at the U.S. Embassy in Moscow, with a focus on U.S.-Russian law enforcement cooperation. Duncan Nutt is a senior executive with Integrity Risk International, with a global track record leading integrated risk management program within a diverse range of industry sectors. Prior to joining Integrity Risk, Duncan served as global head of security for UBS AG for 14 years. During his tenure, he managed multiple high-profile enhanced due diligence projects and led several corporate investigations and major operational risk events. I'll kick things off with a brief introduction about Lextegrity, and then I'll pass it over to Tom and Duncan to go over their organizations. We'll obviously save some time at the end for questions, but we do recommend everyone asking questions throughout the presentation. We will try to pick these up as we go, and would prefer if the discussion is more interactive with the audience. Lextegrity is a compliance software company that's unique compared to some of our other peers because it was founded by in-house professionals from companies such as UI, Pfizer, and Avon. In addition, the founders brought in subject matter experts from compliance professionals from different other companies. With that, kind of one more slide on Lextegrity. We're small, we're a startup, and we want to share what we focus on. And so our main three products really are third-party due diligence management, approvals and disclosures, and my personal favorite, transaction monitoring analytics, that focuses on a high range of high-risk transactions in areas such as expenses, sales, but also travel reimbursement. We've been used by our clients on 3 FCPA-related monitorships, so we've been presenting our products and tools in front of regulators over a number of times. With that, I'll turn it over to Tom to briefly talk a little bit about Stroock Stroock Lavan.
Well, thank you very much, Mikna, for having me today. Stroock Stroock Lavan is a large national U.S. law firm. We have offices in New York, Los Angeles, Miami, and Washington. I am co-chair of our white-collar criminal defense practice. I should say I joined the firm fortuitously in the middle of February, on February 14th, exactly 10 days before the Russian invasion of Ukraine. Since that time, my work has been taken up largely by sanctions matters. As you mentioned in your introduction, I served as the resident legal advisor for the Department of Justice at the U.S. Embassy in Moscow for 8 years over 2 tours. A lot of my work relates to the former Soviet Union, so sanctions has become a very important part of my work now. And these issues, as we're going to be discussing today, they're constantly evolving. So much of what we're seeing is case of first impression. You said the sanctions on Russia are unprecedented. The kinds of rulings, determinations that we're getting out of OFAC are also unprecedented. And so everyone is trying to figure out, what is OFAC doing? What does this mean? How can they be as efficient as possible, meet these compliance expectations, which are constantly changing? So I think this is a very timely panel we're having today. And it's great to be able to discuss this with two professionals like you and Duncan. So with that, over to you, Duncan, to introduce yourself.
Thank you very much, Tom, and thank you, Mikna, too. So, yeah, my name is Duncan Knott. I'm the Senior Vice President within Integrity Risk International. I'm based here in London. Integrity Risk is a global investigation, due diligence, and risk management company. We are the sort of firm that is engaged by most of the bulge bracket investment banks, private equity, and a number of major corporate clients, whether they be based in the States or in Europe or in Asia. And the sort of work that we're doing often is pre-transactional. We're taking very close looks at potential targets for those transactions, and we're giving the best informed opinion, particularly with respect to reputation, in some cases source of wealth, and in others the integrity of the supply chain. So on that note, what we thought we'd do is switch into interactive mode, and I'm going to act as moderator, as Mikna said at the beginning. We are certainly inviting questions. We'll see them pop up on our control screen. We'll try to capture as many as we can and throw them to the panel. So I do encourage you, if you hear something that you'd like to ask a question on, please do so. But I will start, and this one's for you, Tom, not surprisingly. Can you just briefly summarize for us what OFAC expects companies to do in respect of compliance with these Russian sanctions?
Well, in compliance with all sanctions, OFAC a couple of years ago came out with a document they called the OFAC Compliance Framework. If you haven't read it, I urge you to read it if you're working in this space. It's about 20 pages long, and it explains exactly what OFAC expects of companies in terms of complying with sanctions. A lot of what we see in there is general and is transferable to anti-money laundering, anti-corruption. A lot of it comes out of the FCPA guidance that we've seen from DOJ and SEC over the years. Just to summarize, to really boil it down, they hit on 5 key elements of a sanctions compliance program: management commitment, risk assessment, internal controls, testing and auditing, and training. Now, a sanctions compliance program is important because A, it can help you prevent violations in the first place. B, if God forbid there is a violation and you have to go before OFAC or DOJ or some other regulator, and you can point to a robust sanctions compliance program, that will help you. It may prevent charges from being brought, prevent an enforcement action. If there is an enforcement action, it will certainly work to your favor as a mitigating factor. If you don't have this, the absence of this is certainly going to be considered an aggravating factor and more of a reason why they will bring a matter. Now, I mentioned these 5 elements: management commitment, tone at the top. I think we're all familiar with what that means. Internal controls, having internal systems that allow for the detection of possibly problematic transactions. Testing and auditing, I'm sure you and Mikna will speak about both of those because that's what you guys do. Training, so that you get your people who are interacting on these issues with business partners to flag potential issues, extremely important. But the one I want to focus on for a second is the second one, risk assessment. And the reason this is so important is because every company has a different risk profile. The program that you set up has to be commensurate with the risks that your company faces. If you're before OFAC, if you're before DOJ, and oh, why didn't you take this due diligence to the 12th level? You stopped at the 8th level. You've got to have an answer for that. And the answer should be, well, we did a risk assessment. The risk assessment identified these areas of risk, and from that risk assessment, the recommendation we got, usually from outside consultants, was to do this level of due diligence. That's what we did. That's a much better answer than oh yeah, we didn't think we needed to go that far. So I think risk assessment is really essential because it helps you to keep current with what are the emerging risks. It helps you to refine your program so that it's meeting those current risks. It tailors your program to what you need because there's an unlimited amount of resources anyone can put into compliance. So the question is, how much resources should we put into compliance? What's really the point of diminishing marginal returns? What is maximum cost effectiveness? The risk assessment will inform all of those answers. I get a lot of questions from clients. What do we have to do? Do we have to do due diligence in all of these? You know, how far back do we have to go? How much resources should we put into compliance? All of those questions have to be answered against the backdrop of a thorough and robust risk assessment. So it's a little more than you asked for. What are the main elements? I gave the 5 elements is what OFAC expects. Key though is risk assessment because that will inform what you do in every other area of your compliance program.
Yeah, and look, Tom, you made a really good point just at the start there. I mean, we're talking here in the context of Russian sanctions, but let's not forget, there are many other sanctioned activities. I mean, clearly at the moment, the issue of forced labor and the dates by which these measures are going to be getting enforced are clearly going to be on people's minds. And I think, you know, drawing from what you've said is that the point about these measures is they're often applicable across multiple different potential sanction risk.
And not just, Duncan, not just sanctions risks. I mean, the kinds of things we're talking about, due diligence, compliance so often comes down to knowing your business partner. Who is behind the entity that you're dealing with? Getting at that can help you identify money laundering risks, FCPA corruption risks, sanctions risks, and also the risk that the business partner may be looking to defraud you. And so this is just important on so many different levels. So the kinds of things that you and MICNA do in helping companies with due diligence review their business partners, protect the company in a million different ways.
Absolutely. And you know, later on in the discussion, you know, we're going to be talking a little bit about, particularly in the context of these current sanctions, but just what sort of hidden risks are there out there in terms of understanding who the ultimate beneficiary is, particularly if changes have occurred in order to mask that in relation to these sanctions. So,
and they are changing on a daily basis for obvious reasons, quite rapidly. So you've got to stay on top of what they're doing. Otherwise, you're going to be left holding the bag. If you don't catch their manipulations, guess who's going to have to answer for that before a U.S. regulator?
So let me bring MICNA in here. And again, you know, talking from a platform perspective, you're working with your clients every day on, you know, the engine, if you like, that is often driving these compliance programs. But perhaps, you know, speaking, you know, specifically in the context of the Russian sanctions, but perhaps more generally in relation to other sanction risk, can you talk a little bit about the challenges that you're seeing clients facing?
Sure, and I think I'll build up on some of the things Tom has talked about. I think most of our customers are in the non-financial industry sector. So we've seen recently, I think as recent as last week, Lisa Monaco, DOJ's Deputy Attorney General, spoke on a number of panels, and she's been getting a lot of media attention over a statement she said that the Russia sanctions are the new FCPA. Excuse me. But the one thing in her statement last week that drew my attention was that she did talk quite a bit about how historically sanctions were mainly focused on banking and financial institutions, but recent sanctions are significantly going to impact multinational corporation. So any other company that has some nexus to Russia or in countries neighboring Russia or countries friendly to Russia, such as Turkey or UAE, could potentially have a risk exposure there. So that's where I think we're seeing more of our customers looking for help when it comes to our transaction monitoring tool. And that ties very well with what Tom talked about earlier, risk assessments. Because risk assessments, everybody that's worked on a risk assessment knows they are periodical. You do them every year or every 2 years, or when regulations or law change. As Tom just said, regulations and law are coming out every day. So you want to make sure your risk assessment is updated and then translate that into your monitoring and internal controls. Because once you've identified those risks, you want to do something about it. You can't, when the government's coming to knock on your door and you're saying, oh, 20% of our business is in Russia, but 1% of our compliance team, or like 5%, is looking for Russia. That's not really a risk-based approach when it comes to your compliance. You want to make sure you align your compliance resources with the risk identified in the risk assessment. So that's where I think in terms of resources, we're seeing a lot of companies struggle through, especially when it comes of multinational companies that typically don't have a mature, dedicated sanctions team. And that's where people like Tom come in. And probably, I assume, Tom, most of your customers are now coming not in the financial sector, or a lot of them are outside of, they're all over, because that's where they're not used to dealing with such a large volume of transactions, or sanctions and then transactions, because all of this ties very well together. Once you set up the rules, then you actually have to monitor and look at those things. So I'll touch back on this again. I'll pick it up on it again when on like different ways to evade sanctions and what controls to put in place. But I think that's kind of some of the initial points I wanted to just make here.
And you know, well made too. And I think, you know, look, the key to take away from that is that, you know, sanctions programs, sanctions compliance programs, particularly in the financial industry, have been in existence for many years and obviously are well advanced. What's happening now through these latest rounds, whether it be the Russian sanctions, whether it be forced labor in Xinjiang province in China, is that a lot of other corporations are now being, you know, captured in that net. And there's another piece to this as well, which certainly we're seeing in terms of the engagements that we're receiving, is, you know, take the compliance element out for just a second and talk purely about reputation. And what we're seeing is that a number of major corporations, even without any direct link themselves or exposure themselves perhaps to Russia or to China, are becoming increasingly keen at board level to, for example, with a transaction that doesn't touch Russia, to know whether or not their partners in that transaction have potential exposure to sanctions risk. And that, I think, is quite interesting because it underpins, compliance aside, from a pure corporate reputation perspective, these issues have got the attention, obviously, at board level, and they're driving down through the organization to the respective deal teams. And they are being very mindful about the risk too. And you know, well they should, because another thing that we've noticed, and it's almost sort of growing exponentially week by week, as Tom, you hinted earlier on, is that from an investigative perspective, there are indeed sometimes clandestine ways in which some are seeking to manage, others might say seeking to circumvent these sanctions. And I'm thinking here not just of you know, well-known events like trying to blend coal or blend oil in order for them not to face the sanction risk, but I'm thinking particularly of intermediary agreements. I'm thinking particularly of changes to corporate structures to make them deliberately more opaque with the intent of masking the ultimate beneficial owner. And Tom and Mikna, I'd like to ask your thoughts here, and Tom, perhaps let's start with you in the context of enforcement.
Yeah, no, this is an extremely important point because the regulations change and the subtext of the regulations change. I mean, we've seen this for years on Wall Street. There was no insider trading regulation, then their insider trading regulation came in. So the schemes always evolve. in lockstep or often ahead of the regulations. And that's what we're seeing right now. There's a lot of, you mentioned blending of coal. That's an obvious, or oil, that's an obvious one. But a lot of what we're seeing is relocation of businesses to third countries. So Russian businesses are relocating to third countries, so they don't appear to be sanctioned Russian businesses. They're hiding behind front people in third countries as well. And let's not forget, sanctions liability in the US is strict liability without knowledge or intent. If you're dealing with an SDN, you could be on the hook. You could be held legally liable for that. So the fact that they've done a good job of masking their participation in a transaction doesn't necessarily protect you. In fact, it makes it all the more important you get underneath the structure to figure out who you're dealing with, because there may be a sanctioned individual or a bad actor unrelated to the sanctions on the other side of the transaction. You've got to take reasonable measures to get at that. You talk about the situation where the board wants to know a transaction that has nothing to do with Russia, but who are our business partners in there? Do our business partners have a connection to Russia? That's exactly the right question to be asking, because the transaction may ostensibly have nothing to do with Russia, but it may in fact have a lot to do with Russia. You're going to be on the hook for that if it does. So all the more important to know your business partners, look beneath the surface, figure out who you're dealing with. The DOJ is absolutely all over these things, as are the FBI and other investigative agencies in the US. Mikna referred to Lisa Monaco's statement. I was actually there when she said it at a White Collar Crime Institute event at the New York City Bar Association in early May, and she said that exactly as Mikna said, sanctions are the new FCPA. They're putting a lot of resources into sanctions enforcement, and what they're doing is they're focusing very much. There's the Klepto Capture Task Force, which is designed to seize Russian dirty assets when possible. Proving those cases is extremely difficult because the criminal source of the funds used to purchase property in the US, just to take one example, that's extremely difficult to prove. It's got to prove some rigged privatization in Russia in 1990. Good luck with that. But if the individual has been sanctioned and then they're evading sanctions, that's a readily provable crime, a recent crime that DOJ will have a lot more visibility into. So that's where a lot of the focus is. And so I think it makes it extremely important to focus on understanding who your business partner is, making sure that you're not being dragged unwittingly into some sanctions evasion scheme.
Absolutely. And Mikna, talk to us a little bit about what you're seeing in terms of, from a platform perspective, the red flags perhaps, or the indicators that all is not what it should be in terms of the processes that and the transactions that you're monitoring.
Sure, and as I said, I'll reinforce that point. Historically, people would think of sanctions as banks or financial institutions. I think now it's very important that these transactions can affect any company, especially we're seeing now customers in areas where they have products that are easily transportable, like pharmaceuticals or technology, microchips, things like that can be easily transported by truck or over borders. And why I touch on that is because there are already different evasion schemes that have come to light where Russian goods are being sold to Russia, let's say through intermediaries. And I'll touch here because this can take different shapes and there are different ways to structure it. And then I'll go into really what can be done to prevent that from happening in terms of control. So an example here is, for example, goods being imported to Russia without the manufacturers or the trademark owner's permission. Companies such as the ones in France, where there's still grocery chains and the Home Depot of France is still operating in Russia. So these companies are still operating there. So there's a risk to some companies that certain third parties might unknowingly to a US company take those products and actually resell them into Russia. Another risk relates to purchase of electronic components from elsewhere. So we've all seen the images with Russian missiles that have US manufactured microchips in them. This goes again to reputational and all sorts of risks that we can't even begin to comprehend. But when selling microchips to a different country, it's important to know where they're actually going and who's going to use them. In China, I know we're talking about Russia, but China will be an important country to keep an eye on because they are very technologically advanced and they use some of the US manufactured microchips and components, technical components, and even IP, intellectual property, to manufacture drones or laptops or mobile phones that could be resold into Russia. So that's another area of interest. And then the simple, because I'm saying simple because it's been around for a long time to evade sanctions through intermediaries. Let's say a Turkish company has an agreement with a German company. They buy goods from Germany, and then the Turkish company has a separate agreement with a Russian company. So the Turkish company, after they buy the products from Germany, they sell them through countries like Kazakhstan or Azerbaijan to Russia. So again, unknowingly, your products might be transferred to Russia. So on everything that we've talked about earlier about like knowing your customer, that's very important. But I would even take it a step further to know your customer's customer. You need to know where those products are going if you're dealing with an intermediary. And this is where analytics and transaction monitoring can play a huge role. Obviously, these can be designed by compliance people and analytics, but transaction monitoring tools can be a lot more efficient because they're more nimble and you can change things on the fly as new techniques are being used. So that's where I think in terms of timing, it kind of can be more efficient. So for example, statistical or trend or anomaly detection analytics could be very useful. If for the last 5 years, a certain distributor in Turkey has been buying, I don't know, $1 million worth of product a year, but then suddenly after the war started, the invasion in Ukraine, you see that distributor buying $10 million. Those are transactions you want to pay attention to and understand what that sudden spike in those sales was prompted by. So that's where these transaction monitoring tools can be quite helpful. And then on the other hand, these tools can play very well with due diligence. You've onboarded, let's say, a vendor that you're expecting to do $250,000 a year in transactions, let's say sales or buying or any type of transaction. But then when you're looking on monitoring side, you're seeing huge volumes of transactions going through that third party. Maybe that should prompt compliance to update their due diligence and maybe do a more detailed due diligence, reach out to a third party and ask for additional due diligence, like Duncan and Integrity Risk, to really go dive deeper, because this wasn't the risk model you kind of were expecting there. So that's where I think it's another area of risk, especially when dealing with those geographical risks. And that's now geolocation is very important. So some countries are already known to have higher risk. We've seen UAE being used. We've seen Turkey. Turkey's already, I think companies are already familiar with Turkey and Syria, for example, where certain products were being sold to Turkey but shipped into Syria. So things like that have been happening for a long time. Now they're just being used for a new destination. So that's why all of these areas are really of high risk, and not just doing analytics, but also doing some basic detection methods. Like it's not that difficult to really look at shipping addresses and screen those and make sure shipping is actually matching the billing party, because often it happened, there's companies that got in trouble for that, where they were billing a company in Spain, but the products were going to Cuba, for example, or billing a company in Ukraine, this is a real case where a company the address was in Ukraine, but the products were being shipped to Crimea. So those things become very, especially as hopefully at some point, like things will stabilize, and when geolocating and looking where things are actually happening, are these in Ukraine or are these on an occupied part of Ukraine? Where are my products actually going? Are they going into Ukrainians, or are they going to Russians that have occupied? So those things are going to become highly important. And I'll only touch on one more thing, not to take too much time, because crypto is also very important, and we're seeing that being used a lot more recently. So that's one area where, in terms of monitoring, companies can do small things, but that can have a big impact. So, for example, in terms of expense reimbursements and credit card and P card purchases, there's already codes called merchant codes, MCC codes are known, that are specific for crypto transactions. So they're like 612 and I think 651 that are crypto sellers and quasi cash indicators. So if your companies are starting to monitor those transactions and look, and there's been transactions identified neighboring Russia where people are using their company credit cards to buy crypto. Why is that happening? And that's where compliance needs to look into that. And if new risks are identified, then you need to really have that feedback loop with the risk assessment and go and update it, and perhaps make changes there, because that's an area that is going to be used and has been used for potential sanctions evasion.
Look, I want to pick up on one of the points that you just made, and then I'm going to segue it into a question that we just have received from the attendees, and that's on this notion of, you know, how much is enough, right? And to your point around, you know, really diving deep. Let's take a supply chain, for example, to understand if what you're being told by the entity that's supplying you is true or not. And oftentimes, you know, particularly in these sensitive locations like China, like Russia, self-certification or certification from the supplier is the foundation of what you're going to put your trust in. And for companies like ours, who often got called in to do the validation, and let's not pretend, it has always been challenging for companies like ours to operate in authoritarian locations like Russia, like Belarus, like China. And without doubt, in the last 4 months, particularly with respect to Russia, and for some time with respect to China, it has become harder. But this is the key factor. This is all about relationships, the associates that we would have in order to, for example, give our clients the knowledge that we have been to particular sites and we've ratified that what their supplier is telling them actually matches with reality, and that the parts or the rare minerals or whatever it may be that they're being told are coming from location X are in fact coming from location X and not location Y. And that piece is still absolutely possible, but it's dependent upon relationships onshore that have been there for many, many years. You cannot simply magic up that degree of trust to be able to operate in those challenging locations overnight. And this point around verification plays into the question that's come from the floor. And that was very specific, and I liked it. And Tom, it's really one for you. The question was, who is DOJ going to find responsible where they find that a breach has occurred?
They're going to find, first of all, the sanctions apply to US persons, so they're going to be looking at the companies and individuals who are most immediately subject to the sanctions, i.e. US persons. The question is, so that's going to be the target. they will, if they can, they will get at the bad actors who are evading sanctions. That's much more difficult because they're usually based in countries with which we don't have good relations, with whom sharing evidence is difficult, from whom extraditing is difficult. So they're going to be looking primarily at the U.S. companies who are squarely within their jurisdiction. That's who they're going to find responsible, and any individuals who demonstrated gross negligence. Whether or not they're going to find you responsible is going to be a function of whether or not you did enough. Did you do enough thorough due diligence? Was this reasonably discoverable upon the exercise of due diligence? And the key word in due diligence is due, D-U-E, which means appropriate under the circumstances. How do you know how far you have to go? This is the question we started out with. This is a question we get all the time from clients. Again, there is no right answer in the abstract. It depends on what your company's needs. How do you know that? You know that by doing a risk assessment. So if you have to justify the level of due diligence that you did, as I said at the outset, you're going to be in a much better position defending that if you can show that that is tied to an independent risk assessment and the recommendations that came out of that. If you just say, oh, this is what we decided to do because this is the budget we had and management didn't want to spend too much on compliance because it's a cost center rather than a profit center, that's not going to be a good answer. We did this because we had an outside risk assessment done which identified these areas as our prime risks and these as the appropriate ways to mitigate them. To go one level further is simply not possible given the risks in China, given what it would have taken to get behind these companies, something like that. And based on a risk assessment, we thought that we had an appropriate compliance program based on the risks that were identified. So the answer is, as always, it depends, but what it depends on, there's a clear answer to that at least, which is it depends on the recommendations that come out of your risk assessment, which is why the risk assessment is so important. And it's so important. You talked about new clandestine means of evading sanctions. That's another reason why the risk assessment is so important. If you're capturing risks from 5 years ago, but not the risks today, the intermediaries in the UAE, the mixing of, Russian oil with, Lithuanian oil or something like that, if your risk assessment, if your compliance program isn't catching that, that's not an effective, robust, current compliance program. So you got to be monitoring these risks on a day-to-day basis because they're evolving so rapidly.
Tom, to that point around risk assessment, and again, it comes another question from the floor, and it perhaps illustrates, the degree of concern that corporates have around this, and certainly. We've seen this from some of our clients that have adopted a very, ultra conservative approach about anything to do with Russia at all. And this question perhaps mirrors that degree of conservatism because the person is asking whether we're at the point where a US company should be looking at performing screening searches on all its third parties with business operations in the European Union.
I think they should. I mean, again, this is going to come back to, we don't know how many business partners there are, what kind of resources the company has. So this is a question, again, that's going to, my first piece of advice to that company would be to do a risk assessment, come up with a reasonable plan. But you've got to be thorough now. It's not just, we have EU, UK, US sanctions, and then we have evasion taking place through a number of third countries that we've talked about. So simply doing, screening on your Russian business partners is not going to get you much. Against the US sanctions list, you've got to be screening your business partners against all the relevant sanctions lists and for the other risks that you talked about, human trafficking, etc. And you've got to be going beyond Russia because, as we know, the Russian bad actors are operating through a number of third countries. So you've got to have this. I'm sorry, there's no way around it. This costs a lot of money. But it's an upfront investment. And once you get the system in place, you're going to be catching all sorts of problems, and you will save yourself money in the long run. I guarantee it.
Okay. So we've talked about. If you like, the familiarity of the financial sector in terms of sanction risk. We've talked about, the inclusion now of the wider corporate entities in terms of their compliance. But I want to switch gears a minute and talk about another cohort of our attendees today who are in the legal, accounting and consulting professions. And Tom, I'd like to ask, can you discuss the May 8th determination and what it means specifically for that cohort?
Yeah, certainly. So on May 8th, OFAC came out with this determination focused on a variety of consulting services. The EU and UK followed up with similar orders subsequently. It's quite detailed. Again, if you haven't read it, I would urge you to read it and make sure you read all of the FAQs that were issued about it subsequently, so you know exactly what OFAC is talking about. To make a long story short, the May 8th determination prohibits the exportation, re-exportation, sale or supply, directly or indirectly, indirectly being a key word here, from the US or by a US person wherever located of, here are the covered services, accounting, trust and corporate formation, or management consulting services to any person located in the Russian Federation. It includes an exclusion for entities in Russia that are owned or controlled directly or indirectly by US persons. Now, this is quite broad. It came out, I think everyone was wondering, what does this really mean? And coterminous with the issuance of the determination, and subsequently OFAC came out with some additional guidance. And I just want to read a couple of the key provisions because you'll see just how broad this prohibition is. Accounting services under the determination is defined as services related to the measurement, processing, and evaluation of financial data about economic entities. And they say, oh, and it also includes tax preparation and filing. So that's pretty broad. And they'd say it's not limited to that. It includes those things. So it could go beyond that. Management consulting services includes, listen to this, services related to strategic business advice, organizational systems planning, evaluation and selection, development or evaluation of marketing programs or implementation, mergers, acquisitions, and organizational structure, staff augmentation and human resources policies and practices, and brand management. Quite broad again. Auditing services also covered by this, which they define as examination or inspection of business records by an auditor, including checking and verifying accounts, statements, or other representation of the financial position or regulatory compliance of the auditee. Legal services per se are not covered by this, but if a lawyer is engaging in one of the prohibited services, the fact that they're a lawyer is not going to save them. I mean, I didn't talk about corporate and trust formation, trust and corporate formation services. Sometimes lawyers do that. If you're a lawyer performing one of those services, you could be caught by this. Now, as I mentioned, there's an important exception in this, which is that the determination does not prohibit US persons from providing services to persons located outside of the Russian Federation that are owned or controlled by persons located in the Russian Federation, provided that the provision of services is not an indirect export to a person located in Russia. So you can provide services to a Russian sub that's based in Dubai without violating this. But you've got to make sure that the services you're providing, if that Russian sub in Dubai or whatever, is not a front for somebody in Russia. So what does this bring us back to? It brings us back to due diligence and knowing who you're dealing with, exactly what we've been talking all along. Because whether or not you can avail yourself of this exception depends on who is the ultimate recipient of the services that you're provided. And if that ultimate recipient is somebody in the Russian Federation, then you're going to be on the hook for this. And they make clear in this that the indirect provision of services includes situations which the benefit of the services is ultimately received by a person located in the Russian Federation. So you got to look not just at your immediate business partner, who's standing behind them, is that somebody in Russia? If so, it's probably going to be a no-go. So a dramatic expansion of the scope of the sanctions to sectors that have not been traditionally subject to these kinds of restrictions.
And especially because of this void that's going to be created in terms of consulting and legal services in Russia, I think it's expected that companies that might not be subject to sanctions, let's say China or India, might try to fill that void. So it's important not just for the due diligence, but also for monitoring of, let's say, billing records, and simple things like search terms and looking at keywords can help identify potential services that are actually being provided outside of Russia, but for Russian entities, and that's where companies might also exactly what Tom said, but really an example on monitoring up to the project and up to the hours that are being charged by consultants or attorneys.
Right, and I mean, it's a kind of monitoring we haven't had to do in the past, which we now have to do. Again, coming back to our theme about how everything's changing. So I mentioned there's an exception for US-owned companies in there. There is not under the US sanctions for British-owned companies. So you might think, oh, I'm okay because, you know, I'm not providing this to a Russian company. It's a UK company in Russia. That's not in the, that's not, that exemption is not in the determination.
So, Mikner, I'd like your thoughts on this. And again, it's another question from the floor, and one that I can, you know, sympathize with, having worked for major corporations myself. You know, one of the challenges, no matter how persuasive the arguments are made around the need for a compliance program, every organization has, you know, budgetary restraints or financial concerns, and they certainly want to see, if they're going to spend money, what the return on that investment is going to be. So perhaps, Mikner, if I can throw that to you, how do you see somebody within a corporation being able to articulate, you know, internally around the potential return on investment opportunities that they would get as an organization were they to make the sort of investment in a program that of the type that we've been discussing this afternoon?
Yeah, I mean, I think that's a great question, and we get it a lot from our customers, to be honest, especially the ones that did not have historically problems. Because if once they have been through a DOJ investigation or had to respond, suddenly they realize how serious it is and how much they are in need of help. But when it comes to really that return on investment, I think there is a lot to unpack there in terms of different value that you can get from certain tools, because when we've talked about monitoring, we've talked about due diligence, but if you don't have the right systems in place and the right products like tools to monitor, everything can take a lot of time. You might need a lot of people. So it's really at times when we explain to some of our customers, we look at and say, okay, how many people would you currently need to run daily analytics that look at 100% of your transactions in order to monitor it and run on them, let's say 30 analytics. And then let's say you want to change those analytics every week because there's new things coming up. Like, how much would that cost? Because that can, when you start thinking about it that way, and we've had customers that have decided actually to build things in-house, when you start doing things correctly and putting all the pieces in place and all the data scientists and all the engineers that you need to build something really good to actually monitor and have access, like for compliance, to have access to those transactions that are happening in Russia, that are happening in Belarus, that are happening in Turkey. Quickly things go in the range of millions, to be honest. So that's when, like, a product that can solve a lot of those problems, that's like 10% the cost, then it becomes more of it's a lot easier for companies to get management's buy-in.
Agree. And I mean, obviously the size of the entity, and as Tom's point around the risk profile of that entity as well, you know, counts for a lot. And I think, you know, it would be wrong for anyone to draw the conclusion that such a program has a significant or an impossible budgetary amount, you know, tied to it, such that it would, you know, just be seen as being impossible to implement. It need not be. I mean, even if it were for an entity that perhaps wanted to run its supply chain through a series of red flag checks, you know, to engage with a company like ours or yours in order to do that, the cost of running those red flag public source checks on the supply chain is, not significant. So the point is, I think all organizations need to look at their risk, they need to look at their size, they need to look at their budget envelopes. But one thing that, echoes through loud and clear from Tom is that the last thing that you can do is nothing. So just go ahead.
Yeah, I just wanted to jump in on that point. How do you justify the cost? I mean, this is something we hear from clients all the time. How do you prove the value of preventing a bad thing that didn't happen? How do you know the bad thing would have happened? It's always a hard sell for the internal compliance officer. I always say, look at the settlements that OFAC comes out with, or the DOJ comes out with. Look at the fines that are imposed. And when you read the statements of fact, you see inevitably it's the case that the company had deficiencies in its compliance program, and then they wind up paying a huge fine. So it's sort of like, look at those and say, do we want to wind up like company XYZ that paid this huge fine because they didn't have a compliance program in place? That to me is how you justify it. It's hard to show a direct profit from it, obviously, because it's preventative, but it's sort of like, how do you measure the value of not smoking to your long-term health? It's, you've just got to look at it in a different way. And I think the data is there that the absence of a compliance program can cost a company a huge amount financially and reputationally. Sorry, Duncan, I interrupted you, but I just wanted to get that out.
No, but Tom, listen, it's the perfect segue to the last question because, conscious that we're about 5 minutes away from the end. So, to all of you who have submitted questions, I'm afraid we haven't had time to get round to them, but we certainly have a note of them, as we have of each and every one of you that has kindly joined us this afternoon, my time, morning, your time. But let's get on to this last point. And Tom, it is a segue. How much is the cost of non-compliance? Well, let's ask that in the context of where you see Department of Justice enforcement going in relation to these particular sanction measures over the course of the next 6 months, for example, year out.
Well, I can do no better than to do what Mick already do, which is quote Lisa Monaco, sanctions are the new FCPA. That's where DOJ is focusing. You've got to be extremely, the sanctions they're designed for political purposes because the president has found there's a national security threat. So this is something that's the highest priority for the US government. All the sanctions in the world don't mean anything if people can easily evade them. So you've got to stop the evasion to make the sanctions effective. Effectiveness of the sanctions is a key element of US foreign policy right now. So of course they're going to be focusing on that. And they either will be some poster child kind of cases, some particularly egregious violations where US companies are implicated in that, and that's who's going to get focused on. A couple new industries that are going to be focused on, I think, real estate, art, the other sort of ancillary industries beyond. You talk about financial institutions have been on this for years because of the Bank Secrecy Act, which has been around for 50 years now. There's a lot of discussion about extending those requirements to other industries. I say art, real estate, financial service, some kinds of asset management, lawyers, accounting firms, etc. So I think there's going to be a lot of focus on those industries which may be in receipt of dirty profits, dirty proceeds, and don't have the same kind of KYC procedures that the financial sector has built up over the last 50 years. Next, I think we're going to see a lot of focus on crypto because it provides anonymity. So it allows for people to hide behind it. What Nick said here is crucial: geolocation. You may not be able to identify the individual on the other side of a crypto transaction, but you can certainly identify the location, and that's what DOJ expects you to do. And we're also going to see a lot more ransomware attacks. And it's important to understand the expectation there is not to pay, to report that to the government right away. If you're paying, you may be paying a sanctioned individual, you may be encouraging further ransomware attacks. So I think those are going to be the main, the new focuses, in addition to everything we've got used to AML and FCPA over the last, 40 years.
Excellent. Well, yeah, good synopsis, Tom. I mean, for sure, they're coming and they're going to come in hard if it has a political dimension to it. Look, I'm going to give the last word to Mick because Lextegrity were kind enough, or have been kind enough, to put the framework around this webinar this afternoon. And so I think it only right that, Mick, you have an opportunity to comment either on that point around enforcement or any of the other points that are surfaced during the course of this discussion.
No, I'll just use the time for one more Lisa Monaco quote, to be honest, because this is very recent and it just drew my attention because it really drives the message of that Tom's been really talking about earlier of the importance for the U.S. government. So this quote is from last week in Washington, D.C., where she delivered keynote remarks at Investigations conference, and she ends one of her points and says, "And for anyone who seeks to evade sanctions, the warning is simple: the Justice Department is coming for you." So that can't be more clear than what the intentions are, and to the extent you've not paid attention to like the things we've talked about earlier, or I'll just kind of say that again, ignoring things, that's not going to be a defense. Like if things are happening within your company and the data is there, that's not going to be a good defense when the Justice Department is going to come asking questions. And there are cases like the Amazon case where they had information on IP addresses, like really IP addresses, and they knew, Amazon was aware, for example, where certain services were being rendered, and they were rendered in sanctions jurisdictions. I think we're going to see a lot more of that, where if the data is available and companies are not really doing anything about it, they're not going to be looking at that in a very good light. So I'll wrap it up with that. Thank you, Duncan and Tom, for your time. Thanks everyone for the great questions, and please reach out to any one of us for additional follow-up questions. I'll put on the screen our contact details. You might have seen the slides are attached, so you're free to download those. Obviously there was a lot to cover and unpack, so we didn't want to focus too much on that. But to the extent you have questions, please feel free to reach out to any of us, and we would be happy to help.
Thank you, Mick.
Thank you, Duncan. Thanks, Tom.
Thank you.